Let's now move back onto the PowerPoint and have a look at some of the price ladder trade opportunities for the day. So first and foremost, what you've got is a distribution of the oil chart. Now, again, to understand today's price ladder, we need to talk a little bit about what the market structure was all about, and we're going to utilize the profiles for this. So first and foremost, this is last week's range. We can see that obviously the market had quite an aggressive up move from 48.50 all the way up to 50.50. So quite an aggressive up move last week with very little trade facilitated at the top. So that's a very early clue that this market is particularly bullish. Why? Because we're failing to trade anywhere near the higher prices of last week. Now we can see early on this week the market opened at the higher end of last week's range and straight away catapulted out of the range and has distributed even higher. But note, we're in an uptrend. We've taken out last week's high around that 50.80, and the market has only extended $1 over the last 4 days. So that's a very tight consolidation, particularly for the oil market. But it has to do with the fact that the market was long and bullish going into the OPEC announcement. Now, what's key to understand is when you have very tight distributions like that, you've got a lot of locked up positions. You've got obviously short positions and you've got long positions. So the break on either side is particularly key to watch. Now, we can see very early on, in the week, very early on today, the market tried to extend, failed, and then came back and distributed in and around the distribution of the week. Note, once the OPEC announcement had come out and officials had agreed to the 9-month, which was pretty much expected, we then took out that 50-55 area and we got a really aggressive $2 move, unwind of all these long positions in the market. Do note, of course, notice where the market stopped. The oil finally stopped and found some support at the highest traded area of the last week around that 49.00. So again, amazing structure in the oil, some really good structure you could have leaned on today. Had you got the timing right, there's some really good volatile moves to take advantage of. So let's have a look quickly and see what the price ladder looks like. Now remember, bear in mind, we said once we broke that 50-55, we were looking for short side trades. So let's pay attention now and see how this played out over the course of the day. So we can see we've broken below that 50-55. The market is now offered. Technically, there are now longs that need to take profit as well as fresh shorts that have entered. So we've entered the market. Note our stop goes around that 50-55 area. That is where the break point was. And we're now just going to pay attention to what happens when the market takes out this 50.08. Interesting observation. Obviously, do note that that 50.08 is actually a particularly bad low, and we can see, bad lows don't tend to hold very often. So what we're going to pay attention to is what happens once we get the break of those 08s and the volatility. Okay, so we can see the markets kind of holding an offer now, not looking to do anything too aggressive. And if we look on the chart here, we can see that, when the market, if we look at the 50-60 area, that was the key point we're talking about, that 50-55. Notice the pickup in the volume there, almost 15,000 contracts traded once we took out that 50-55 area, and the market dropped a good 35 ticks once it took that out. It then bounced, consolidated a little bit, but let's see what happens now when it starts to get a little bit heavier. So we can see in terms of the price ladder, as prices are coming down, we can see that someone is trying to buy it, but note what happens every time a buyer tries to buy the market. We get a reload, and as soon as we get the reload, the seller then hits the market. Note, seller hits 100, and then offer, offer, offer. And straight away the market goes bid, and what does the seller do? Reload, 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 and the minute he gets his reload, offer, offer, offer. So we can see the price action all of a sudden has become quite heavy. Now note, we said obviously that's a very bad low. When we have bad lows, we do tend to get some stops behind them. The thinner the market, obviously, the more volatile the stops will be. So let's take a watch and see how the stops break and see how we could have taken advantage. Note, we're getting a little more aggressive now. We can see the price actions come in. We can see every time there's a reload on the offer, we start to see the buyer obviously, every time the buyer tries to lift the offer, the seller reloads and then sells again. So note, 18s hold, 17s hold. Buyer tries to buy 28s, and all of a sudden, the seller reloads the 17s, and seller sells 16. Whilst reloading the 17. So a lot of reloading all the way down the page. Obviously, if you're a candlestick person, when you do have one of these very aggressive reversal type patterns, what tends to happen is you also do get stops below that 20. So let's see what happens when we trade a retest of that 20, that previous low. Market comes to 20s, goes bid 20, 21, 22, and let's see what happens now. As soon as we traded above those 20s, we start to see that reloading coming back in. Okay, so we can see that seller reloading the 23s, reloading the 23s, reloading the 23s, reloading the 23s. We can see he keeps accumulating, shorts on the 23s, instantly sells the 2s, and goes straight after the 1s again. So again, we can see all the way down since the 30-35s, we've seen the seller accumulating shorts and also selling lower prices. Now let's see what happens. What's going to be interesting now, in a minute you're going to see what happens now when this buyer finally stops buying and the seller gets a little bit more desperate. So we can see the seller goes to the 20s, hits the 19s, and straight away buyer's back in. So we can see the buyer is still there. But let's see what happens now. The buyer's about to disappear. So we trade the 17s, buyer's still there, lifts the 18s, and what do we get? Again, reload on the 18s, reload on the 19s, seller hits, and again, reload on the 18s, reload on the 18s. So we can see the buyer is still holding the market here, but it's just a matter of time before the buyer is finished. And there's a very early clue. So we saw the seller become a little more aggressive there, 150 lots, and straight away we've seen that. We could see the seller now is starting to become more intentional. He's not willing to hang around anymore, and suddenly the buying has disappeared. No more counter bids. Again, we see another 100 lot of 14s, 11s trades. Again, one more last buy. Bang, bang, bang. Takes it out. Hits the 20s. Stops taken all the way down to the 97s. And pretty much that is our stop run. Now, that's what I want to talk about in terms of price action. What then followed was a series of very aggressive sell-offs. So this oil obviously then continued to sell off over the course of the day. It did drop a good $1 and a bit year after. So important, when we had that key structural break of the 50, 55s, that was the key. Now, important note, obviously, do pay attention on the first retest of that 50, 55 over the course of the next couple of days. You could have yourself a very good trade opportunity.